Hey people, I welcome you back to Caroline's Online Academy to yet another video. This is a series of videos in which we are solving previous year questions and sample question paper questions from the chapter Dissolution of Partnership. Till the previous video, I had been doing realization account based problems, and in this video, we're going to be doing questions in which they require you to pass the journal entries. Understood? So I have this question from 2022 All India examination. This question was asked for 4 marks. Let's go ahead and solve the question. Chanda, Tara, and Nisha were partners in a firm sharing profits and losses in the ratio 3:2:1. They decided to dissolve the firm on 31st March 2021. Pass necessary journal entries for the following transactions after all assets have been and third party liabilities have been transferred to realization account. So the first part has already been done. So they have transferred the assets and liabilities to realization account. They want us to pass journal entries for realizing the assets and settling the assets, settling the liabilities. And then they've given us 5 transactions. So it's time for us to start solving. So I prepared the journal format for you here in the books of Chanda, Tara, and Nisha. Serial number, particulars, ledger folio, debit and credit. And then the first adjustment here is a typewriter completely written off from the books was sold for rupees 9,000. My rule is very simple, my dear children. There are no asset accounts or liability accounts open. Whenever you sell, it is an income for you. Any asset, it's an income for you. And all income has to be credited to nominal account. As far as dissolution is concerned, there is only one nominal account that is open during the dissolution process. And that nominal account is realization account. So any sale which is giving you income will be credited to realization account. At the same time, if money comes into the business, cash comes into the business, so bank account will be debited. A typewriter completely written off from the books was sold for 9,000 rupees. It doesn't matter if it was written off, if it was not written off, if it was still there, if it was not there, it doesn't matter. It has brought us 9,000 rupees cash. So bank account in the business is increasing. Bank is an asset. When it increases, you got it debited. So bank account debit. So when money comes in, you debit bank account. And it's an income for the firm. So realization account will be credited. Old typewriter sold. The amount for which it will be sold is what, my dear children? 9,000. That's it. It's very simple, my dear children. 9,000. The second transaction is Chanda took over stock worth 96,000 at 84,000. Whenever we realize an asset, it's an income for the firm. And income will be credited to realization account. So realization account will be credited because stock has gone out. We have realized stock. But did we receive money for that? No. The partner took over the stock. When the partner takes over the stock, they don't pay money. Instead, they would want us to Instead, they would want us to reduce it from the liability of the firm towards the partner. So basically, they would set it off against the capital account that they have, and therefore, Chanda's capital account, because equity is reducing, Chanda's capital account debit. Whenever equity reduces, you got it debited. So Chanda's capital account, the liability of the firm towards Chanda is reducing because Chanda has taken over stock. To realization account. Realization account is credited because whenever the stock goes out, it's an income for the firm. Whenever the stock is the asset is realized, it's an income for the firm. His stock is being realized, and that's why. Now, what amount are we supposed to take? Are we supposed to take 96,000 or 84,000? It's very simple, my dear children. It's 84,000. Understood or not? We're only bothered about the realized value. So it is 84,000. Stock taken over by Chanda. All right. Now the third one, my dear children. What is the third one? Nisha was to get a remuneration of 42,000 for completing a the dissolution process. Okay, good. Now, how to think? My dear children, as I told you, the only nominal account that is opened during the dissolution process is realization account. Am I right? And remuneration paid to anyone is a expense for the firm. All expenses have to be debited to a nominal account. In this case, the only nominal account that is open during dissolution, which is realization account. So realization account will be debited. Now, I have also told you that whenever it is partner is involved, you don't actually pay them or receive money from them. Am I right? Instead, what happens? You set it off against a capital account. Now, Nisha has to be paid remuneration. So the liability that towards Nisha by the firm is increasing. Earlier, it was a certain amount. Now that extra 42,000 liability is also increasing. Whenever liability increases, in this case, equity actually, you're supposed to credit that account. Am I right or not? So Nisha's capital account will be credited. By how much, my dear children? 42,000. Remuneration payable to Nisha. Alright. Fourth one. Creditors of 23,500 took over all the investments at 10,000. Remaining amount was paid to them in cash. Now, these creditors, they are taking over an asset. Did they take the asset in full settlement? No. The creditor of 23,500 rupees took over all the investments at 10,000 only. For 10,000, they took the investment. So what about the remaining 13,500? It was paid to them in cash. It is given in the question that remaining was paid to them in cash. Had this sentence read as creditors of 23,500 took over all the investments at 10,000 in full settlement, then there will be no journal entry because creditors have taken over the asset and therefore it will be realization account debit to realization account credit. So there will be no entry. But creditors of 23,500 took over all the investments at 10,000 and remaining amount was paid to them in cash, which means we paid them the remaining. For the part where they took the investments, like out of the 23,500, 10,000 for which they took the investment, no entry for that. Because when you actually pass the entry, creditors liability settles, so realization account will be debited, and stock asset goes out of the business, so realization account will be credited. Journal entry will be realization account debit to realization account. So that we cannot pass entry for that. But for the remaining 13,500 rupees that we paid, a creditor for 13,500 is settled. A liability for 13,500 is settled. Am I right? So realization account will be debited. And we paid 13,500. So bank account will be credited because when money goes out, bank account will be credited. Am I right? Creditors settled. How much? 13,500. Not the entire 23,500 out. For the 23,500, out of that 10,000, they have taken stock, not stock investments. Am I right? Remaining 13,500 only was paid to them. Sundry creditors amounting to 40,000 were settled at a discount of 10,000. So what is the total value of the sundry creditors? 40,000. They were given a discount of 10,000. So 10%. So that what would be that, my dear children? Minus 40,000 into 10% is 4,000. So they will be paid 36,000. Understood or not, my dear children? A liability is settled. So journal entry will be realization account debit to amount is paid and therefore bank account and the amount paid is 36,000. Understood or not, my dear children? That's it. With this, we have come to the end of this problem and this video. I'll come back with another problem of the same type. We have some 6 or 7 problems and we'll solve them in the next 2 or 3 videos. People, take care, have fun. Please do like, share, subscribe, and comment something like something that you want to tell me, whatever you want to tell me. Share it with people who are preparing for their board examinations. Take care. Bye-bye.